Good afternoon. My name is David Kamite, and welcome to Voices That Impact. This is our fourth show, and I'm pleased to share that our audience is building. And today we have a very special and dynamic guest, Martin Jackson, who is an icon in the insurance industry. Now, I know some of you may be like, oh my God, why would I be listening to this? But again, I got to tell you, there's not many who has been in the industry, has had such an effect in the industry, and has been involved in the development, the evolution of the industry. What you'll hear today is some of the dynamics that's taking place in the insurance industry. And for our audience who are young and thinking about, oh my God, this is a boring industry. As I shared in our last episode, the insurance industry is one of the most dynamic industries in the world. Can't do anything without it. So for the young audience who's contemplating careers and other things, what you'll hear today is the dynamics of all of the various ways that deals are done. So welcome. Welcome, Martin. Thank you. Thank you for having us. And for the audience, if you could share your dynamic background, be very helpful.
Oh, thank you, David. I've been in the industry now nearly 60 years. I did retire about 6-7 years ago.
Didn't last very long, did it?
No, I bought a farm in Georgia and realized that I'm not a very good farmer after a couple of years. So I've got my two sons running the farm now, and I've come back into the business.
Got it.
I joined the business, the insurance business, in 1967. It was my first job from school, and in those days in the UK, we started school, most of us. Those that stayed on at school till they were 18, you started your work almost straight away. There was no time off or anything like that. And my father said to me, he said, Martin, you've got to find a job. He said, you've been looking now for about 3 months. That's enough. Next job that comes along, you're going to take. Otherwise, you're going to leave home. So that's the way I got into the insurance industry. And lo and behold, I was lucky enough to be hired as a junior accountant, of all things, at a reinsurance company. A reinsurance company gives you a much wider knowledge and much wider exposure to all types of risks. I've often said that in reinsurance that you're not master of any one particular area of business or finance, but you know an awful lot about the widespread. And if you have to specialize, you specialize. If something comes along that needs expertise, you either bring the expertise in or you have to get it yourself. But you get a very wide knowledge of industry through the method of reinsurance. I was a junior accountant. I did rather well there. I passed some accountancy exams, and I was transferred into the underwriting, which was much more my cup of tea. So in the underwriting side, I started off very junior. I was transferred to London from a little town called Reading, just outside of
I know Reading. Okay.
just outside of London. I started work in the General Reinsurance Syndicate, which was owned at the time by a Netherlands reinsurance group. I actually was most of the time taking photocopies of what were called slips. The slips were a description of the risk. The underwriter put his stamp on it, and I took a photograph. But I was sitting next to the underwriter, and the underwriter would then be asking questions, and afterwards the underwriter would sit down with me and inform me what was going on. So it was a great education. I was a junior underwriter there for 69 until 74. And that's really where I picked up a spread of knowledge about insurance and reinsurance. In the meantime, I took a degree in insurance at the Chartered Insurance Institute. I'm an associate of the Chartered Insurance Institute, which is like a degree in insurance, bachelor's degree. And afterward, some 20 years later, I became a fellow a fellow is like a master's degree is where you take management courses as well, not just insurance courses, but the management courses that go with them. During that period, I was exposed to all types of risks, and it gave me a great platform on which to build my not my business, but my career. I forgot to mention that I speak Spanish.
Oh, you do?
Yeah.
Oh, see? Very dynamic.
I went to school. I went to a school where we had Spanish lessons, and so I came out of that school with a knowledge of Spanish, pretty good. I took additional classes in Spanish, and then I was approached, of all things, by a Venezuelan company. And,
Interesting.
Yeah. And would I be interested in moving to Venezuela with my young family? I had 2 little girls, a couple of years old, and take up a post in Venezuela as their international underwriter. And I thought to myself, well, this is one heck of an opportunity. And not only is it an opportunity, I want to perfect my Spanish, because English schools speaking foreign languages is not really the best best platform on which to learn. So off I went to Venezuela with my family. We flew there, fantastic, and I had 4 really good years in Venezuela. At that time, it was democracy. They had elections. I think it was the oldest democracy in South America. It had been going about 25 years. Which was more than any other place at the particular time. But anyway, Venezuela was another experience, and it really put me in a position where I was making decisions without somebody looking over my shoulder. I was writing the international book with some Venezuelan business, but most of it was treaty reinsurance from overseas. So I was seeing brokers coming in from the UK, coming in from the States, and place to place in business with the National Reinsurance Company of Venezuela, Riesgo Nacional de Venezuela. And I was a senior underwriter there. What I didn't know, and I should have known, but in those days when you're in your youth, maybe you don't look under the cover as far as you should. What I didn't know is that AIG was the major shareholder of Riesgo
Tentacles everywhere.
Nacional.
Tentacles everywhere.
Yeah. And they had a couple of companies in Venezuela, and I was also helping them with some of the business in Venezuela where I could help them. And they invited me to come to New York, asked if I would accept a position to run the reinsurance activities of AIG, both ceded and assumed in New York. So by that time, I'd met quite a few people at AIG. I hadn't met Mr. Greenberg at that time, but I had met other luminaries from AIG. I was very pleased to take that opportunity and to run the reinsurance activities of AIG. I was actually transferred in 77, and I was 6 years in New York running those activities. As I said, both the assumed and ceded. There's a little story I'll tell about the assumed side, because some of the business that we wrote was actually from Lloyd's. So the business that I've been one side of the fence, so I was now seeing it
on the
other
other
side of the fence.
Interesting.
Yeah, and the Lloyd's underwriter in those days was like God. Nobody could be better than him. Nothing was done by committees.
Right.
Nothing was supported by real technology. It was in his head,
Right.
and he didn't want to share it with a lot of people. And so we decided, along with Guy Carpenter, a fellow by the name of Michael Booth, who was the broker on this stuff, I said, I can't understand what I'm looking at. There's not enough information in what you're giving me. Why don't we design a questionnaire, and we'll put that in front of the underwriters at Lloyd's. They can fill that out, and I'll get a bit of knowledge of exactly what they're doing. And this was the first property questionnaire that was ever devised. And we put it together. Michael Booth went to see.
That's where the dynamism comes
Yeah.
in.
So Michael Booth goes to see the underwriter, one of the underwriters in Lloyd's, and his name was Bob Kiln. Mr. Kiln is very famous in the reinsurance market. He's written lots of books. If you've studied reinsurance, you've picked up a book by Bob Kiln. And he said, look, we devised this questionnaire. Here's the questions we want to ask. And Mr. Kiln looked over at him and he said, young man, you're asking me to undress in public.
Oh my God.
And he said, I'm not prone to doing that. And he refused to complete the questionnaire. But 2 years later, they all had to do it, and the questionnaire became standard.
Right.
I don't think those questionnaires now
Exist.
Yeah. Back in the day,
Yeah.
before there was any real technology supporting this, it was a very important part of the underwriting.
So that's what this was your rising in to the C-suite of AIG.
Yeah. By that time, I think I was a senior VP
Right.
on the domestic companies of AIG. We also started Transatlantic Re.
Yes.
Transatlantic Re was a company, the shelf company actually, that Greenberg bought in 1966 or 67. It had no business left in it. He put it on the shelf. In 77, when I first arrived in New York, I was given the Articles of Association, or the equivalent of Transatlantic Re, and they said we want to bring this company back onto the market. We want our own reinsurance company. And so together with a guy called Steve Newman and Tom Tizio, we put together Transatlantic Re.
That's where Tizio came into the mix.
Yeah,
Yes.
that's where Tom came in. Tom was the first president of Transatlantic Re. I was the executive vice president. His background was property, mine was more casualty. So between the two of us, we did all the underwriting of Transatlantic Re for the first 4 years, I guess.
Right.
And so that's how Transatlantic Re got started. And
Yeah.
it did have, at the time, it did have 2 or 3 other shareholders. We had Gen Re. And,
Right. So just to share with our guests, not to interrupt, just to share with our guests what just transpired, or the transferred knowledge that Mr. Martin just shared in the last, I would say 5 minutes particularly, was a game changer in the insurance industry, right?
Yeah.
And again, some of our audience is not in the insurance world, but AIG, also where I learned the business, right, was the icon of the industry for so long. And here again, we're sitting with one of the gentlemen, right, that basically orchestrated the development of AIG to what it was in its heyday, if I may say that, right? And that's why I'm so pleased to have
It's nice of you to say that. But we had a very dynamic you can use when you describe Mr. Greenberg. Because Mr. Greenberg, Mr. G, MRG, was dynamic.
Yes.
And he seemed to know more about everybody's business than they knew themselves. So we operated on what was called a profit center approach. It was flat management. It was Greenberg, and then across you had 100 profit centers. But he would know or have knowledge of each one of those profit centers.
That's a lot to know.
Especially in those days when you didn't have the technology that you have today. You had broadsheets and spreadsheets and stuff like that.
Amazing.
But he had a very, very tight knowledge of everything under his wing.
Wow.
And if I could be like anybody in the industry, I'd like to be like him.
Yeah.
So anyway, we had Transatlantic Re, and of course Transatlantic Re is now one of the major players in the reinsurance market in the United States. Funnily enough, after we took back, that is AIG took back Transatlantic Re, owned it 100%. Eventually, it became a public company and its own right.
Right.
And then subsequently, Gen Re bought it, or not Gen Re, Berkshire Hathaway. So they've done a full circle.
Yeah.
um,
Still a powerful organization, though. Right?
It was a very powerful organization, and with New York Insurance Exchange was started in 1979. The governor of New York was Hugh Carey, and Mr. Greenberg and Hugh Carey were very close, and it was Greenberg that really was the emphasis behind the idea of a Lloyd's in New York, New York Insurance Exchange.
Really? Okay.
Oh yeah.
I didn't know that. Okay.
That was the way it was portrayed. And we established 4 syndicates on the insurance exchange, and I was president of those 4 syndicates. The money that came into the syndicates, apart from AIG's, maybe 20% or 30%, I can't remember what, was from Chinese companies. So we had the Ming An and other Chinese companies were investing in these syndicates. We had the Hungarians were investing in it. So we had lots of international interest in the insurance exchange. And the exchange ran so-so for 4 or 5 years, but it never really caught on.
Like Lloyd's.
Not like Lloyd's. And Lloyd's is even today, is something special.
Right.
It's not like it used to be, but it is... it still has a place in the market. So anyway, after that, as I said, I had 2 young kids. AIG was a great place to work, but they were very poor payers, as you probably remember.
I remember. I started there.
So I was then asked to become president of a reinsurance company that at the time was owned by the Home Insurance Company, and we started US International Reinsurance Company. That was a very successful company over 7 years. We had a great team of people. We had about 130 odd staff. We wrote over $1 billion of premium by the last year. We got sold on together with the Home. So all of that ended up in the Zurich. Now, I was president of a subsidiary of US International Re, which was a sub of the Home Group. And the Home Group, there was a lot more finance, there was a lot more capital in the Home Group as a whole than there was in my company. My company was capitalized at about $1 billion, and I think Home Group was 4 or 5 billion. So whatever they decided to do, I wanted to spin USI Re off, and I tried to do that.
I see.
But it got sold along
Right.
with the Home Group to the Zurich. So I found myself having developed this very successful company with a nice paycheck and all that, but out on the street, because Zurich had its own operations. They didn't need us.
They didn't need you, right?
And so consequently, I moved on. And at the time, I could have gone to American Re, I could have gone to other places, but I decided that I needed a break.
What year is this? What year is
this? This was 1989.
Okay.
And yeah, the last 2-3 months of 1989,
Okay.
I took a break.
Okay.
And then I was approached by QBE from Australia.
Okay.
Now, I just married an Australian girl, my second marriage. I thought that was a good idea. So I moved out to Australia, and I became president not president, they call it the managing director, chief executive officer of Sydney Re.
Okay.
Which was their reinsurance arm. It's now called QBE Reinsurance. And we started that from nothing. We bought a company in New York called the Royal Re from Royal Sun Alliance. Fantastic deal. Made a lot of money out of that particular deal. Mainly we made the money because Royal Sun Alliance were in a tough position. They needed money. They were selling their assets effectively, and we became aware of it. And we were able to corner the reinsurance company, and that was the start of QBE in the United States. So we did that in 1990. So within the first year of my being in Australia, we'd bought the Royal Reinsurance. We'd converted that into then QBE Re. It became QBE Re. And we also started writing the insurance business in the United States. So everything you see here, QBE, started from that little effort of ours.
Another seed, yet again, you planted.
Yeah.
Transatlantic, QBE.
Yeah.
As I said to the audience, as I shared with the audience, that the dynamic behind your career, right?
Yeah.
The little that I knew, it's just all these seeds that got planted. It's just all these things that sprouted from your involvement, right?
I think it's more, it's not just me though. It's the people that are around you. You make a team.
Right.
And it's the people that are with you. I brought all my team out of what was left of USI Re. They all came over to QBE with
Did
me.
they? Okay.
Every one of them.
Wow.
And so
Testament to your management leadership.
we had a great.
Don't blush. It's okay.
I'm not prone to blushing now. I used to blush.
You used to blush.
It's the people in USI Re. We built up a fantastic company. We built up a great rapport amongst the people. I've been very careful about who we'd added and who we had working with us. I didn't want to lose the team. I wanted to look after the team because when we were put out on the street, we were all put out on the street.
Right. Right.
It wasn't just me.
Right.
It was
The whole
the
team
rest
went,
of
right.
the group, and I felt some responsibility, obviously. So, we started the QBE here in the States, but at the same time, we did the same in London. We had another company in Ireland called the Hopewell, which became QBE. We had a company in London, tiny little company, which we converted into the massive thing that you see today. Now, that wasn't all built up overnight. It took us over 4 or 5 years
Right.
that I was there. We built that up.
Right.
And then after I left, of course, it really
You got
took
it started.
off.
You got it started, though. Right.
I got it started, and I liked Australia. I really enjoyed living there, but I missed the activity of the American market. And I'm not a broker, although some people may think so. I'm not a broker, but I was asked to consider coming back to the United States and running a reinsurance broker in the United States called RK Carlin, who were very famous at the time in the London market. And they had a US operation. I was asked to become president of it. And at the same time, I was asked to become president of what was called English and American Agency, ENAM. ENAM was the first MGA, first major MGA.
Really?
So, yeah.
Okay.
And we put together.
For our audience, that stands for.
Managing General Agent.
Thank you. Thank you.
Okay. So a Managing General Agent has the pen of the carrier. And in our case, we had the carrier's pen, the pen being, we were able to bind them to contracts of insurance that fit within the gambit of a description of where we had expertise and where we had the capability of using that paper. We wrote as an MGA on behalf of the Royal in America. They were the carrier,
Right.
and it was all reinsured back to Lloyd's. So the reinsurance was in Lloyd's. It was Lloyd's that were really making the decisions.
Right.
We wrote the contracts individually, and we appointed MGAs to undertake the administration of each and every one of these programs on behalf of the Royal, who I think had a 10%, it may have been 10% retention in the business. The rest of it was
Lloyd's.
reinsured.
Right. Right.
So that was the first time that I came across a managing general agent with the power to buy, power to buy carriers reinsured. So
Right.
it may not have been the first, but it was the first real effort to
Right.
put something out there in the market. Bit like the hybrids today, what we call a hybrid, which is an insurance company, many of them formed in the last 5 years. insurance company which takes a small retention, maybe 10, 15, 20%, then reinsures all the rest of it out the back.
Right.
They do that using an MGA
Right.
to actually write the business and administer the business. So the model itself was started by Archaic Harville. And as I said, we started that. That would have been in the late 90s.
Right.
The mid 90s.
Right.
It was a very interesting time, but again, I was itching to be an underwriter. So I, as I said, I'm not a broker. I'm an underwriter, and there's a big difference. When I was acting as president or the chief executive officer, I always got involved in the writing.
Right.
I could do the accounting as well, but
you like the underwriting side of it.
I wanted to do the underwriting as well, or be involved, at least know what was going on. I think I must have picked that up from Greenberg. I like to think so. Anyway.
So the MGA, for our audience, I mean, again, there's the insured, like a Macy's or Texaco. Then you've got the broker that represents them. You've got the insurance companies, and you've got reinsurance. Those are generally the layers for our audience, just to give a snapshot.
Yeah, you've got an insured. You've got a number of insureds. Now, they may go through their broker to the major carriers, or they may go to a secondary market, particularly where they're looking for unusual coverage. Because this secondary market that I've just talked about, to a great extent, is what we call excess and surplus lines insurance.
Right.
Excess and surplus lines means that it's not regulated.
Right.
So consequently, you can put clauses into the policy that are not confirmed or not overseen
Right.
by the
regulators.
superintendent
Right.
of insurance in the state of New York,
Right.
for instance. So you've got coverage that is designed specifically for one element of the marketplace.
Right. Right.
And that's very much what we were doing in ENA.
Great history, and for those that actually don't know much about insurance, I think this was a great run-up, right?
Okay.
I think it was, hopefully everyone has learned a lot from your personal history and the evolution in the industry, rather. Today, right, there's more MGAs than anything else. The industry has changed quite a bit, and technology. You've seen it all, right?
Yeah.
The growth, the changes, the dynamics, the different people come into the industry. What do you say now to young folks coming into the industry that is very different, as with most industries, right, that has evolved? How do you see the technology changing things from your vantage point?
The technology obviously has had a very, very important influence on the market, whereas it used to be just the one underwriter and keeping it in his head.
Right.
And there are people that can still do that, I'm sure. What happens today is that you've got the actuaries very much involved in almost everything that's done. So you've got underwriters, you've got actuaries, you've got accountants, you've got far more technical knowledge about different types of risks, catastrophe risk, for instance. I used to do it all in my head. This questionnaire I talked about give me some information, and I could pretty much figure out what the likely catastrophic event might be from a hurricane on the East Coast, and what its effect might be, so I could then rate the various layers of reinsurance. But nowadays, it's put into a catastrophe model. You don't have to sit there and work it all out, and it was quite a task,
right,
to do all this. And so consequently, that's just one example of the tremendous influence that technology has had on the market.
Does that speed up the underwriting, obviously?
Well, it should speed up the underwriting, but if I have a complaint about the marketplace today, I don't think there is such a being, except perhaps one or two in the Lloyd's market and elsewhere. I don't think there is that being who is really the underwriter. Now, what you have today is a committee. A committee makes decisions. That committee is made up of lots of different people.
Right.
Financial people, actuarial people, technology, maybe even an underwriter or a claimsman are involved as well. So you have a committee making the ultimate decision. There may be one guiding light who would be the senior underwriting officer, but really is a decision being made by a committee. And I've always been a believer myself that a committee is not as good as having a designer. Now, God was a designer of the horse, but it must have been a committee that designed the camel thinking they were designing the horse.
I love that. Very interesting. I'm sorry. I love that. Technology has two sides, right? Do you see the industry reducing the staff count because of the efficacy that technology is bringing in? Whatever the AI now can read policies in 2 seconds, right? You've got the claims analysis. There's so many compartments or departments within the industry, like every industry, that AI is affecting. So for our audience, one of the biggest employers, right, in the world, the insurance industry.
Yeah.
And I don't think a lot of people recognize or understand that, right? The depth of the industry, both vertically and the opportunity, both vertically and horizontally, right? In terms of what the industry brings to the table.
Yeah.
And it's one of the safer industries in terms of when the economy churns or goes this way, you don't see a lot of layoffs like you do, like we're seeing in, Silicon Valley, thousands, hundreds of thousands of people. So share with the audience again that there's a little bit more steadiness, right, that we've seen. But do you see that we've seen generally, but do you think that's going to change with technology coming on board?
Well, I think it's bound to a certain extent.
Right.
I think it's bound to, but what I've tried to evoke here is that there's a personal side to the business,
Mm-hmm.
and a lot has to do where you do your business and how you get your business has to do with your networking. Has to do with the people you know.
Your relationship.
And
it's still a relationship business.
Absolutely, it's
Right.
a relationship business, and so will there be loss of employment? Probably, yeah. Particularly in take the actuaries, for instance. What an actuary does, I have this from personal experience. What an actuary may take 2 to 3 months or 2 to 3 weeks to produce, I can now produce it in 2 to 3 days.
Right.
Whereas before I might employ 4 or 5 actuaries, maybe I've only got 2. So there's an example, I think, of what might happen. The actuaries have had a good run from the 90s to now, and they've really proven their place in the marketplace. If anything, I think they've tended to lead the market as opposed to being just a part of the jigsaw. But now I can see AI particularly affecting their presence within the marketplace and within insurers.
Something just came to my mind. I thought to share this with the audience, right? Because it's live today, which is the war that's going on, right?
Yes.
And the shipping lanes and so forth.
Yeah.
Help the audience to understand the impact of how ships have potentially been covered, not covered, et cetera, et cetera. Because I don't think a lot of people associate, they just see the gas pump, right? The gas prices, like, oh my God, now I'm paying $5.60 or whatever. But help the audience to understand some of the things that has occurred in the last, 6 months relative to this war in the insurance market around this. Let's give them perspective.
Okay. Well, first of all, I'm not a marine underwriter.
But you know the market.
I do know a little bit about Lloyd's is still a very major player in the cost of marine insurance. War risk is a separate subject.
Yeah.
And is separately rated as such. A lot of that rating comes from the Lloyd's market. It's not like it used to be, where you used to have the Lloyd. You still have a Lloyd's register, so every ship in the world is recognised within the register. I think that register is now online. When you've got the obviously a war being carried on, then the prices are going to go through the roof, as they have done.
Right.
I'm not sure exactly what is happening, but I think I read somewhere that Trump was going to pay the additional premiums, but I don't know whether that ever happened or not.
Well, it'd be us paying it, right?
I guess we were paying it.
Yeah, somehow.
But that has had a massive effect on the price of petroleum. Mind you, I think there are other factors as well. It's not just not just the cost of marine insurance for the ships that are going through the Straits of Hormuz. It's rather that they are an element of it, and probably quite a large element.
Yeah. And as we start wrapping up the show, and we've got a little time here, I'd like to spend a little bit more time in terms of the youth that is coming out of school, the careers available in this industry, right? It has changed quite a bit. Some of our audience here, again, are not in the insurance world. And I talk to them, some parents, some folks about, well, is there an opportunity in this sector? And you've had an illustrious career, started in London, Venezuela, United States, Australia. And I don't want to suggest that's the route for everyone, but I think some people think of insurance of, you're sitting behind an underwriting desk, and they get the wrong concept. And I share with them, I'm like, no, there's financing, there's marketing, there's this, there's that. And it's very, very, and I think they would register with your background and what's available. I don't think people really understand how dynamic, if you will, this industry really is.
Yeah, I agree with you, and I've been in the right place at the right time. There's a lot of luck involved as well.
Sure.
It's not just that I happened to be there, but I prepared myself for it. I had languages. I did the examinations, which was a pain, but I did it. And everything that I did was to form me or to put me in a position where eventually I could run my own thing, which I've done. It's probably not as easy today as it was back in the 60s, 70s. I think everything is far more structured. I think also our generation, my generation, we were just after the war, and many of the people in Britain that had served in the war never came home. So there was, and many of those people were in Lloyd's. So there were big gaps in the Lloyd's marketplace in the 60s and 70s that we were forced into.
Wow.
Before our time, which was obviously a hell of an advantage for me. But
I never thought about that. That's interesting. Yeah.
And it's probably, I don't know whether that was the case. It must have been the case here as well, I would think. The one thing I would say, this was all great preparation for what I've ultimately done, apart from running and being the chief executive officer of some companies. Apart from doing that, I ended up running my own business, owning my own business and running my own business. And I did that in Gibraltar. I went into the surety business.
Oh, you did?
Yeah, the construction surety business.
I didn't know that.
Yeah, I was 10 years in that business. I had my own business in Gibraltar. I didn't know anything about surety when I went into it, but because of your insurance background, you're like a sponge.
Yes, just take it all in. Yeah.
I know you'll like that.
I love that.
and so consequently, after a year or two of taking it all in, I started my own thing. And I was in, and I think everybody in this business, if you really got desire, you should aim to run your own business. It was great working for John Cloney and QBE and Mr. Greenberg at AIG and Steve Newman at the Hub. That was all fantastic stuff, but there's nothing like working for yourself.
Yes.
And all of what I've done turned out to be a great platform for me to go and work for myself. Now, you can't go and do that when you're in your 20s unless you've got some sort of inroad to be able to do it.
Connections and capital, right?
Yeah. But if you've got that background and you've got confidence in your own ability, then I would recommend that you always try and build your own, do something for yourself, own a business and run a business, and let everything else that you've worked on through your career be the platform to take you that one step higher.
Ditto. No, I obviously I totally believe in that as well. Yeah, it's great. So share with the audience where you're at now and what you're doing with your time.
I came back into the business really because my friends who are still a part of the business asked me to get involved in a couple of programs, the construction programs in New York, and I've enjoyed myself immensely working because I can use my mathematical mind
To solve things, yeah.
Yeah, and I do.
Yeah.
I can do things. I'm lucky enough to be able to do some things in my head. I can't do algorithms, but I can try. I do a few. I advise, really. I'm an advisor with regard to running some major programs. I put their insurance, their reinsurance together. I put together, or help them put together, what's called a risk purchasing group, which is a risk purchasing group is when you have a group of industry players, say in this particular case, it's the owners of the high rises in New York. They have liability exposures. It's very difficult for you to get liability coverage in New York for high rises.
Mm-hmm.
So they all came together and they formed what's called a risk purchasing group. That risk purchasing group then goes out on behalf of their membership and purchases a policy, which they then sell to each one of the individual members according to what their exposures are. So your risk retention group could have, in our case, it has 4,200 locations and 1,200 insureds. So they have, some of the insureds have multiple locations. A risk purchasing group is another, it's almost like a captive. It's another form of providing insurance when insurance is difficult to find.
Right.
And then there's another one akin to that called the risk retention group. And that membership that I just talked about in the risk purchasing group then takes a share of the risk. They're like a little insurance company in themselves. They're well protected. They have to have some capital, but they're well protected by the carrier and the reinsurance, or the administrator and the reinsurance that is provided. So you've got the risk retention group, you've got the risk purchasing group, and then you've got captives and sales. And captive insurance is when, as I said, it's where an industry has a need for specific coverage, cannot get it, and it's provided through the captive is one of the main reasons.
And the cell?
And a cell, I'm trying to think of the exact term, it's segregated portfolio company. It is a company that is established to have cells like, for instance, the RRG, the Risk Retention Group, have cells that are just in respect of that coverage. So they may have 50 or 60 different cells. Each one of the cells is a separate entity, and each one of them is for a specific area of the business. So one might be, as I said, might be high rises in New York. They're normally commercial general liability, the coverage. But others might be for property, might be for property catastrophe. Each one is a cell that has to be financially stable by itself within the administrator's purview, the administrator being the segregated company.
Got it. Very, very
It's
specialized,
it's
intricate
Yeah.
part of the business.
Yeah, and a lot of it is done in Bermuda. Bermuda, as I said, AIG sort of started it all there.
Yeah.
But now it's so involved, the captive market and the and the Bermuda market is now a big reinsurance market, but it provides a lot of reinsurance for the captives themselves and sells part of the captives. So there's a big reinsurance market providing further coverage.
And if for our audience here, this may seem like a circular, everybody's reinsuring or everybody's insuring one another. And
That's bound to. It used to happen.
so it's a very dynamic industry, right? With a lot of different layers and a lot of different concepts, right?
Yeah.
And structures to get something done.
Exactly.
Right, and it's hard for those folks on that says, what am I listening to, right? But what we want to share with you is that these layers are just very interesting financial and operational models that get things done.
Exactly. I mean, you can fashion something in insurance to fit anything.
Right. There's always a response.
There's always a way around it.
Right.
And that's another thing I learned from Greenberg.
Right. Yeah. No. My training at AIG was awesome. I mean, they put you to the grinder, but it just drove you to just like, how do I get this done?
Yeah.
Right.
Every day.
There's always a way to get something done. And
we weren't 9 to 5, incidentally. I got to say, it wasn't 9 to 5.
No. It was 7 days a week.
It was.
Yeah.
I had a phone call at 4 o'clock in the morning.
I tell people I lost all my hair there, but it's with the stress. But in the same breath, great learning, great training ground, and that's why I'm in the industry today. So no, but as we close out, I wanted to thank you for this great conversation and helping the audience not only such an interesting background, but giving the audience the perspective of what the industry is about. And I know there's a lot of words that are new to them. That's right on your handcuff. But in the same breath, for those that are listening and understand the layers, the complexity of the industry, it's a great place to be. If you're thinking about anything in the industry, if you think it's boring, we hope this session helped you realize, oh my God, we've opened your eyes, right?
I hope so.
Yeah. So thank you for your time.
It's been a pleasure.
Yeah, I appreciate it.
Thank you.
Thank you.
Okay.
All right.